Hello, good afternoon. Annie Williams, good afternoon. How are you doing today? It's a pleasure having you here. How are you doing today? Kindly give us your feedback if the audio is good to go for you. Right, so if you can hear me, kindly respond in the chat section. Okay, thank you. So you said you're doing well, sir. Good afternoon. Awesome. Thank you, thank you, thank you. Right, we have it's coming a bit late as you're the first person to join us. I think the link was not sent out on time. Apologies for that. But notwithstanding, we're going to cover what we have for you today. Today is the weekly market roundup. Weekly market roundup. Basically, we're talking about how the week has been, how your trading has been, maybe opportunities that we saw this week that we could have taken, and of course, how we could have managed the trades and a whole lot of other things as well, right? So before we dive in, hopefully others will join us as well. And if you know anybody that should be here, you can as well send the link to them and let them join us on time as well, right? So how was your week? And then William, are you trading already? How was your trading week? Let's get your feedback so we know how to assist you further. As we always say, 10 Trade is the broker of choice. And with 10 Trade, it's all about your success at the end of the day. So let's get to hear from you. How was your trading week? This week was rather busy in the market as we had a lot of news updates. We had a lot of news update that came out from the market, right? Where we had the likes of the FOMC on Wednesday to the USD. That was explosive. Okay, he said, unfortunately, I didn't trade, sir. Oh, hope nothing. Why didn't you trade? Hope no issue. Are you new to the business? Okay, maybe I'll wait for your feedback on that. And I would also just give you the information that we have. We look at a few charts of what happened this week. So at least against next week, you have an idea of what to look out for or how to look out for the opportunities going into next week as well. We're going to discuss that now. Right, okay, and you said just recovering from just recovering from an account crash. Oh, wow. Sorry to hear that. Sorry to hear that. But that's why you are here. That's why we are here. You are here to find out uh, what happened and, of course, how to prevent it. And we are here to help you to prevent that and to improve on your trading. Great, and he said, yes, sir. So I'm going to start and just give you some information as we proceed, but at the same time, you can also tell us what you feel happened, to the account that crashed recently. You could also let us know how much, you crashed, what happened. Was it within one day that the whole account crashed, or was it a gradual process and so on? So while you type that out, I'm just going to give you information from this week. Right? As you can see right in front of us, this here is the news that we had this week, and we still have the one for the USD coming out in about roughly 30 minutes from now as the flash manufacturing and flash services PMI for the USD 2:45 p.m. So we should be expecting some volatility, high volatility coming later today, Friday, right? And of course, right from Tuesday, because there wasn't any news on Monday, right from Tuesday, we started having some high impact news. And you can see all these ones are red. We use the filter over here. We use this filter to select only the high impact news, right? Because we have different news that comes up, but it's the high impact news that is of interest to us, right? So we did that to fine tune it for our trading, for our eyes. And then right from Tuesday to Wednesday, Wednesday was the high volatility for the dollar, the Federal Open Market statement, which obviously has to do with the interest rates to hike or not to hike. And of course, the hikes, as you can see, it was 25 basis points from 4.75, it went up to 5. So that was expected as well. So the market reacted violently as well. Volatility was high as well on that day. So this week was rather a big one for the market. And who knows, next week also might as well be the same. But then this is just the news. Apart from this news that we have over here for the week, because the news basically is a catalyst based on how price should move. Because most times I normally say from my observation, from my little experience, that the market knows what it wants to do. It knows where it wants to go. But the news, which introduces that volatility, which is a rush, that is a period rather, where volatility based on the order flow, money is being pumped into the market. And when that happens, it moves to where it's supposed to very fast and at times in an aggressive manner. And that's why if you check your charts, from this week especially, you notice that the market, okay, sorry, this is, I was just studying something before you came in, right? So this is like Euro USD as an example, right? For this Euro USD, you can see some volatile moves. As an example, the one that came out on Wednesday, this was it over here. You can see the size of this candle. So Wednesday, the FOMC. So you need to also pay attention to this news, right? All these high impact news so that you do not fall victim. And I can see you said that you're actually an intermediate trader. You tried out a strategy and it didn't go your way, $100. Oh, okay. I see, I understand. One thing about strategy, since you said you tried out a strategy, hope you don't mind me also asking how long you have been trading for. You said you're intermediary, so probably you've been trading maybe for a few months. I don't know, a few months, maybe. I don't know whether it's up to a year or a few years. I don't know, but just trying to bring out information from the information that you gave me, right? So how long have you been trading for? Okay, you said 1 year. Aha, okay. Because as you said, you tried out a strategy. That has told me that this is not your first strategy that you are using or you have used. That means that there are other strategies that you have used. Maybe you like them at the beginning, then after a while, you did not like them, you threw it away and then moved over to another one. If that was your case, and I would like to advise you, and that's why you're here, and you said exactly, sir. Thank you. So, as we would like to advise you, sir, I don't know that you've heard this before, that there is no strategy that is 100%. I repeat, there is no strategy that is 100%. What does that mean? That simply means that you need to stick to one strategy. When you stick to one strategy, it's going to help you to know when that strategy normally works. And it's also going to help you to know when the strategy does not work. So when you know when it works, as opposed to when it does not work, then you will know when to use it and when not to use it. I hope what we just said now makes sense, because truth be told, a lot of traders are not using the strategies the proper way. Why do you think the strategy that you have used in the past, why do you think it has worked for somebody and not working for another person like yourself? Because that person most likely has been using that strategy alone over the months, over the years, and has gotten used to that strategy. You might hear some people say things like they like this particular brand of vehicle, right? Because they have been using that and they're used to that, and they will not want to switch to another. And that's what it's supposed to be like, right? And he said, okay, sir, grab. Thank you. So please stick to one strategy. Do not move from, because the truth now is that the strategy, you got it from somewhere, if I'm not mistaken. You got that strategy from somewhere. That means that it is working for that person. So you need to ask yourself, why isn't it working for you? There is no strategy that is 100%. That person will still have losses. I have losses myself. But then it's not just about the losses, but it's what? It's about when the losses occur, when the major losses occur. So when you know when the major losses occur, once you keep like a journal, a trading journal, then you can now start to avoid trading that period. I tell traders that most times I don't trade Fridays. I don't trade Fridays because number one, I'm not a scalper and I don't consider myself an intraday trader. I'm more of a short-term swing trader. So if I place a trade on Friday, that means that I might have to hold it over the weekend. Now, this is just me, my own personal preference, my own trading. You don't have to do exactly as I do, right? You would find your own way based on information that we give you, right? So I don't trade on Fridays majorly because of that reason. I don't want to hold trades over the weekend. So most times Fridays, I'm just paying attention. doing other things that might be relaxing, because the business is actually meant to be passive. If the market was open Saturday, Sunday, it doesn't mean you need to be trading Saturday, Sunday every day. No. So with that said, this here was the news, the FOMC news that we had here. And then also, if you look at what we have in front of us, I'm not sure whether you're familiar with the strategy of support and resistance. That's what we have over here based on all this markings. You can see there's just some simple markings here. But then this markings that we have here, where we have 1, 2, 3, this short horizontal lines, right? I don't know whether you are conversant or maybe you've heard about the pattern, head and shoulders pattern. We talked about this, I believe, yesterday, for those that were here yesterday. Not sure you were with us yesterday. I think yesterday or Wednesday. So we talked about this pattern that we have right in front of us, head and shoulders. And he said, yes, sir. Yes, sir, to you being here, or maybe you know the pattern. Maybe you know the pattern, I'm not sure. So this here is the left shoulder, right? And here is the head, right? And then here is the right shoulder, So we said yesterday, I believe it was yesterday or Wednesday, I think yesterday, we said that we are anticipating the right shoulder to occur. And when this occurs, yeah, it was yesterday, I remember. When this occurs, it's now for us to enter here and then to take it down to this point. And from that analysis, okay, you said you know the pattern, great. From that analysis that we did, you can see it worked out according to plan. So if you had paid attention, for those that were here, hopefully they paid attention, they would have taken advantage of this as it went all the way down to this point, right? And this is a strategy. Yes, indeed, this is a strategy that you could have deployed, anybody could have deployed, as long as they paid attention and then they used it accordingly. Can this strategy fail? Yes, it can. And when it fails, it's not for us to run away from it, because when a strategy fails or when a trade fails based on that strategy, it doesn't mean the strategy has failed. Or what it means is that that trading, right, that's trading, that trade rather, as how would we call it? That trade rather had other plans, because at the end of the day, what you want to do might not be exactly what happens, what the market produces. And that's why this trading is a game, is a business of probabilities, right? Normally gambling is 50-50, but when you put information into the mix, it now becomes you now tip the probability in your favor. Instead of 50-50, it could now become 60-40 or 70-30 or 80-20. And that's why we conduct analysis, because a trader that is not doing analysis is simply gambling. So this was one that happened this week. And that's why, once again, this is the weekly market roundup for us to have a discussion on what happened this week. And of course, what you could have done to improve, right, this week and even to improve next week. So this was the Euro USD that we talked about yesterday. And you can see it played out. And this is gold. Here, gold, right? Price got to this area here, still based on a support and resistance. This is support and resistance for you, right? And you can use these rectangles here. You can use horizontal lines. I'm going to show you horizontal lines now because they look similar. The only difference now is that the rectangles covers a wider area. That's why you might hear traders say an area or a level or a zone. It is still the same concept, because using a price point will not work. You use a price point, it doesn't mean that price will get to that exact point, but price will get to that area. And that's what we use to trade. So this here is an area, as you can see, right? This is an area where the price went up, and it went up because of this area here. We always look to the left. So this area here was what we call resistance. Here was resistance, and then it broke out over here. It broke out, went up, and then came back here and now acted as support. So if you are conversant with your support and resistance, and by the way, that's what we also explain in our beginners workshop, in our beginners masterclass here under the 10 trade roof. So if you're interested in knowing more about this support and resistance, how to draw them, and of course the importance of them, and of course how to use them to place trades at the end of the day. Because It's all about your entry and your exit. And trust me, this support and resistance will help you to know the area, the level, the zone to enter, and of course to exit. To exit is also very important. It's actually more important than the entry, because when you were entering here at this support, you'd have asked yourself, where are you going to exit? You're going to exit at this point here. I can see it has gotten there 2 times, right? So it's all about sticking to that strategy. The strategy can fail, that trade can fail, right? But the strategy will still be the strategy. There is no strategy that is 100%. Now, mind you, as we're having this discussion, this weekly market roundup, right? Today, Friday, TGIF, also take note that we can get opportunities still from this chart going into next week's trading. Because now, if you look very well, this trend is up. This is clearly an uptrend from what we can see here. As this is an uptrend, and you want to trade with the trend, if it's with the trend, that means that you're looking for the market coming back to this point here, right? And then you click on buy, you enter your buy based on your entry trigger, and then it goes back up. That is for trend traders. Or a counter trend trader wants to go against, wants to sell. Where's the best place to sell? It is at the resistance here. So the price is already at the resistance. And for me, as I said, I don't hold trades over the weekend. But if that is your style, this here is a good area where it is now to get an entry and then to take it down here, right? So it all depends on your style, the way you use that strategy at the end of the day. Because as an example, look at this illustration based on strategy. You have this car. Everybody has the same car. Maybe it's a Toyota Camry, Toyota Corolla, or Honda Accord, or whatever. You have the same car, meaning that you have the same strategy. But then because we have different drivers, the cars will be driven differently. You can see the concept behind this strategy. So please, no more changing strategy. Maybe over this weekend, take some time and look at the strategies that you have used since it's 1 year. Even if you have used one strategy a month, I don't know, maybe you use like maybe close to 10 strategies or something, then you can now do something. Look at the one that is simple and straight to the point. Number one, that should be a criteria for you, because the simpler it is, the easier it is for you to make use of it and then to execute your trades on a daily or weekly or monthly or yearly basis, right? So the simpler, the better for you. And then you can also look at the one that maybe has given you the best returns at the end of the day, maybe before it started failing and you decided to test out another one, because there is no need to test out any other one. But this one, support and resistance. Personally, I have been using this for years, right? And it has worked, it has failed. But when it works, it gives you more pips, it gives you a better reward. At the end of the day, this business that we're doing, or any business out there, is all about having a low risk while having high reward. I repeat, it's all about having low risk while having high reward. Simple, right? So you need to understand this very key, very, very thorough. So as we said, you could either be a counter trend trader and you're looking for an opportunity to enter there to sell, or you can be a trend trader and you're waiting at this point here to buy, right? So that is that for this gold. And then let's look at other instruments. Before we look at other instruments, remember we said for gold, you can draw your level support resistance using rectangles or using horizontals. Here is the horizontal here that has been drawn as well. You can see it, and then you can also learn how they were drawn just by studying charts. They say that an image speaks 1,000 words, a chart speaks 1,000 words. So here is 1,000 words, or rather, here are 2,000 words, right? This is 1,000 on the gold. This is gold, XA, USD is gold, and this is the same gold as well. We have two charts. One is drawn using rectangle, while the other is drawn using horizontal lines. So you can as well call that 2,000 words for you, right? So as we continue this, you're still the only one here. Not sure why others didn't come on board. Maybe they are paying attention to the news that is around the corner. And the news that is around the corner is most likely going to be an explosive one. It is for the dollar. right? The dollar has been under a bit of tension this year. It is yet to find its bearing, if you ask me, from the analysis that I have personally conducted from the higher time frames, right? Is yet to find its bearing. So with that said, let's continue. Please, if you have any question, feel free to ask. If you have any question, feel free to ask as we proceed and look at a few more instruments. Here is one that I took this week, right? It looks rather rangy. It looks rather scattered. It looks rather dirty. But if you look at it, it's looking too much of sideways movement over here from what we can see. Too much sideways movement over here. If you look closely, the sideways movement is too much. It's not as clean, right, as the previous ones that we looked at. If you look very well, right? It's not clean, but at the same time, I normally tell traders that once you become one with the market, with the charts in front of us, you would have a good enough understanding of what to do and where to do it, right? So I was able to get a trade on this GBP JPY from here. And you can see it got to this point here, which you could have used as your take profit, final take profit, or hoping to get here. But it didn't get here. From here, it turned around and then went all the way down to this point, right? So even though it went all the way down, as you can see, it was still respecting these areas, right? You can see we're saying area. So even if there's a breach, right? Even if there's a breach of that area, it is still an area, right? When I say breach, if you look at what happened over here, you can see that this is the area that we mapped out here, but it still breached and went a bit lower. And then what happened is still pushed higher, slightly back in until it dropped lower again. So take note of those breaches because it can happen at areas, especially if you're using just a single line, that's the horizontal line, compared to the rectangle that covers the area, the level, or the zone, right? So let's proceed, and maybe we can finish a bit earlier if you don't have any questions at all, right? Because apart from what happened to your account, as you said, you didn't tell us the strategy, so maybe we could advise you even more. You're the only one here, so you could take advantage of this discussion for today, right? So if you look at what we have here, this is the dollar yen, right? Is one of the major currency pairs that we have. This is the dollar yen. So for this dollar yen, as you can see here, the first thing that jumps at us is the trend. And you can see this one is cleaner than this GBP JPY, too much sideways. But this one is a clean, much cleaner downtrend. And you can see this is where it started from, right? And then this is where the market is presently at this area. And if you're going to join these two together, in as much as it went up and down as well, but it was much cleaner in its descent, in its fall, right? So from what we have here, this is clearly a downtrend. It's now for you to know where you would have entered to sell. And that has to do with areas of resistance. Here was former support. You can see there was a breach out over here. We look at the wicks, you can see that it's still closed inside. So that was still an area of support. Here was now an area of resistance after it broke out and came back to retest. And then it came back again and acted here as resistance and went down. So you could have gotten an opportunity in this area this week, especially if you knew what to look out for and where to look out for it. You said the snake and MACD strategy. What? I haven't heard about the snake and MACD strategy before. I know the MACD, maybe it's not the same MACD, I'm not really sure. The MACD, that's MACD, which stands for the Moving Average Convergence Divergence Strategy, right? Moving average. I haven't heard about the snake. The truth now is that there are a million and one strategies out there, right? So in as much as there are a million and one strategies, the truth now is that we can't know them all. But the truth now also is that all these strategies, as I always tell traders, and I want to believe you would agree with what we are about to say, all these strategies are all a variation of price action. They are all a variation of price action. It says, sir, please, when you mark out levels on a particular time frame, do you enter the trade on that same time frame? Yes, I always advise to enter. We advise personally to enter on that same time frame. Why? Simply because if you cross over to another time frame, maybe like a lower time frame, it can easily cause confusion. It can easily cause confusion for that trader. Confusion in the sense that if you look at this one here, it's a downtrend, and then you say, oh, at this point you want to enter to sell, and then you cross over to a lower time frame. That lower time frame could be telling you that it is buy, it is going up, and then you get confused, and that tends to happen a lot, right? So as you said, please stick to just one time frame. That's just a little advice from us to you, from Tentrade to you, to help you out. Try it out and see. We always tell traders today that all the information we're giving you is for you to go and try out, right? You tried out a new strategy, it didn't go according to plan for you. Try out these ones and then stick to the same strategy. Remember, we said that one is very key. And we said also that you have losses, you have winners, but make sure your losses are well minimized and then you maximize your profit, because as you said, you crashed your account. As you crashed your account, simply you were probably not using stop loss. Maybe you're not using stop loss, and maybe your risk management, your lot size, your volume, they were rather poor. They were poor in the sense that you were using a lot size volume that was too large for that your $100 account. Or maybe even you were over trading. Maybe you placed too many trades at the same time. I really don't know exactly what happened. Maybe you could tell us. But we're just saying that because even if you're trading $100, I normally tell traders that if you place one trade using the smallest lot size of 0.01, that is more or less about 1,000 pips. Trust me, no instrument that I can think of, right, can go 1,000, 2,000 pips against you within a week or 2 weeks or 3 weeks or a month or so. Gold can easily try. I know I've seen gold in a week do like 400, 500 pips, but there tends to be retracements. So you should also know the kind of instruments to trade. Euro USD cannot do, I've not seen 500, 400 pips in a week. I can remember if I have, right? If I have, that's been a very long time. And maybe there was something, drastic that happened in the market, right? Because you should know your instruments as well. Know the type of instrument that you're trading based on how it moves. Some instruments in a week, they could move maybe like barely 100 pips or plus 200 or whatever, while some instruments can move like 500, 400 pips. It's always good to have like your average range of pips movement for different instruments. At the end of the day, I want to believe you have an idea the kind of instruments that you trade, since you've been trading for like a year, right? So if you do, then that's good for you. Then you can just walk your way around that as well, right? Good. So we've answered that question. Do you have any other question? We're going to still flip over and just look at a few more instruments and also what to expect going into next week. So here is one. This is the Euro card. And if you look at the pattern we have here, this is a flag. As you can see, a channel up, a flag, and there was divergence here as the market had been going up. And look at what we have over here. You would need to do some testing. You need to check back and be finding out, why did this happen? Why did that happen? And so on. Understood? So, okay, great. Why did this happen? Why did that happen? Why did the market bounce from here? Simple. If you look to the left, you can see here is resistance and also acted as resistance. And you had some mini support here. So this is an area, a key area. And this will happen over here. It pushed higher according to the area, just for you to know that people in Australia, in Asia, in Canada, America, Nigeria, Ghana, all over the world, there are people that are seeing this area just like you, and then they're taking action here. So if you can see what's happening on the charts, meaning that you study the charts, and then you notice that these areas are obeying what you have done based on your drawings, your support, your resistance, that will give you more confidence, right? That you are seeing what even those in the banks are seeing. You're seeing what the hedge fund traders are seeing. You're seeing what those in the prop firms are seeing. And that would build confidence. Now look at where the market is over here. It's in the middle of nowhere, right? So for me, to buy, I would rather prefer, that is to buy, I rather prefer for the market to come out to this point here, which acted as support and resistance in the past. And then we get this entry here, and then we take it back to these highs over here, right? Or we wait for the market to come here as a counter trend trader, and then we sell here to take it down. So either of the two, but for now, the market is clearly in the middle of these two levels, right? So you must understand how to determine your levels. You must understand what happens there. And of course, you already know why you need to mark out this level. So it will help your eyes to see the levels. And when you see them, you can easily um, plan yourself against when price gets to those places. Plan yourself against price getting here. Plan yourself against price getting here, because now this is presently where it is in no man's land. That means that there's nothing for us today on this particular one, only if something happens and it comes back here. And because if you look at the time now, it's almost 3 p.m. Before you know, the market will be done for the day within the next 8 hours thereabout, right? So it's a thing of what? It's a thing of understanding your chart, what you have drawn, and you would understand better when you draw them and then they start to come to pass, they start to come to reality. This is the Bitcoin over here, and this time around, this is the daily time frame. The daily time frame, if you look at what we have here, remember we said the strategy can fail. This area here acted as support as it pushed higher. Then after a breakout, you can see the size of this candle here. This is the daily time frame. So this is sometime last year around June. So around June, we had high impact based on the size of this candle, and it broke out from this support here, only later to act as resistance here. As you can see, acted as resistance here, then acted as resistance here as well. But then over here, expecting to act as resistance here, what happened? It broke out to the upside. Now, this is clearly here. That simply means that as it broke out to the upside, we're expecting this place to now act this area or level or zone, even though we're using a horizontal line. We're expecting this area to act as support and then push higher, maybe to this area here. So you could also expect this Bitcoin to push higher to maybe even like the 30K region or even 35K region thereabout, right? 35K, because if you look very well to the left-hand side, we have this here as support, this here as support as well. So it is yet to be tested as resistance. It is yet to be tested as resistance. And when something is yet to be tested as resistance, you might as well have a lot of orders there, pending orders. People would have set pending orders here to sell, to hopefully take it back down to this point here. So you need to be able to look at the market, have a good understanding of the market, and then take advantage by trading. And that's what we do as traders. We traders, we're not just traders, but we are analysts. First of all, we are analysts. Because a trader, let me tell you the difference, because the people normally ask, what is the difference between a trader and an analyst? First of all, a trader can easily be somebody that just places trades without conducting analysis. That is gambling. So we have a lot of traders out there, and then we have a lot of traders that are analysts as well. So an analyst also might not necessarily be the person that places trades, might just analyze the market. But you know that analyst has put time into research. That analyst has put time to study the chart, has studied the market. So there's a thin line between a trader and an analyst, and that's why we say it's best for you to be not just a trader, but an analyst, and you should be an analyst first of all, and then you trade. Are we together? So these are things that we need to understand. We all need to understand at the end of the day. So this is the Bitcoin from the daily time frame perspective, and it's also good to look at the higher time frames. Higher time frames will give you like a wider perspective of the market based on what we might probably be expecting in the new months to come, what we'll be expecting in the rest of the year, more or less. In the new month to come, we might as well be expecting, because if it doesn't get it this week, today's Friday, if it doesn't get it next week, you know that a new month is starting, a new quarter is also starting as well. Well, because by the end of March, the first quarter is going to be over, right? By the end of March, we're going to have the first quarter, Q1 will be over. And then before you know it, Q2 would also be starting April. And then we might expect the market to come here for Q2, that is April, May, and June. And they might be projecting, oh, maybe sometime in May or June, we might as well get to this 35, 30K area of interest, Okay, you said I'm enjoying this. I like it. I like your comment. Thank you for saying that you're enjoying this. Let me ask a question, please. Hope you don't mind, just because of the comment that you said that you're enjoying this. Why are you enjoying this? Why exactly are you enjoying this? Let's have your reasons. Now, we always say Like this is going to be recorded as well. Oh, sorry, it is recorded already. It's been recorded now as we speak, but this is going to be posted on our YouTube channel, right? I'll try to post the YouTube link. I believe you might probably have it if you've attended any of the sessions here on that 10 trade. Right, so I'm going to post the YouTube channel so that you can subscribe, you can turn on the notification bell, watch the videos, and just generally take advantage, right? So, okay, you said your simplified teaching, sir. Oh, thank you for that. Now, spread the word, please spread the word that under the 10 trade roof, I repeat, under the 10 trade roof, we make it as simple as possible for people to understand what we are doing. Because once you understand, now I tell people that, let me give you an example from what you just, said now. Maybe that could also make sense based on that aspect of saying, oh, you're simplified teaching. So let me give you an example. Now, if there's a new movie that just comes out, wow, this movie just came out, awesome movie, but then you haven't seen it, right? But then I have seen the movie. It's very easy for me to come and then to tell you this story of that movie. I don't need to tell you the story for 1.5 hours. I can tell you the story in like 10, 15 minutes, in a short time, 5 minutes even. I can tell you the story in a short time, well simplified, straight to the point. You get it to the point where when you now decide to go and watch that movie, you already know more or less what's going to happen. And that's what we normally say. Excuse me, to clear my throat. And that's what we normally say. Under the 10 trade roof, right, where this training is being brought to you, this webinar, we simplify the business up to the point where this that has taken us years to understand will take you a few hours or a few days to grab it, and then you can easily hit the ground running. Imagine if you had, I'm just saying, imagine if you had gotten hold of us within 1 year ago, right? Obviously, you'll not be where you are now, trying out too many strategies, having too many losses, and so on, right? You would have been far away. So now let me also drop the YouTube link just in case. That is it over there. Just in case you do not have that. So that is the YouTube link there for you. Please also note, you can subscribe, turn on the notification bell, watch videos. If you have any questions, comment on the videos, like the videos. You can also share the videos, share the link, or whatever the case might be. Okay, you say you have subscribed already. Awesome. Now I have a question for you as we'll be rounding up in the next 1 minute or two. Let me ask this question before we call it a day. And if you also have a question, feel free to ask. You happen to be the only one who joined us today. Let me ask this question quickly. What do you think 10 Trade can do for you in order for you to find that success? Because you are on an adventure in order to become successful one day, right? And that's why, as I said, adventure, because 1 year you've been doing this and then you are still doing this. People normally say, oh, 1 year you've been trading and you've been having losses. Oh, why are you still trading? You're still trading because you believe. You believe. That is the first thing. You believe. That is the mindset. That is the psychology behind what you are doing. You believe that you can still make it, and that's why you are still trading after 1 year. But now, because you have found 10 trade, 10 trade is going to help you to ensure that it doesn't turn into another year that you have still been trading without much to show for it. So let us know, what do you think that 10 trade can do for you personally, right? For you to improve. Let me know. You said this mentorship is enough, guys. So please, I wouldn't like it to stop. Okay, sure. It will not stop, right? I repeat, it will not stop. And also thank your account manager. Who's your account manager? Is it Princess? Is it Princess? Princess, your account manager? If Princess is your account manager, I know we have a few account managers. Okay, so Mr. Victor Fort is not an account manager, right? It is not, he happens to be the country director. But I was about to say that you can also thank your account manager, thank 10 Trade, anyhow you can. Thank them for, you can even thank Mr. Victor for this session that has been made available to you and to others. right? Thank him and thank your account manager, maybe the lady that called or calls you or send you email for, oh, your account is this, you need any assistance with deposits, withdrawals, and so on, right? So you can also do that as well. And then we would give you, that will be the fire that we need to do more for you and for everybody. So on behalf of 10 Trade, we want to say thank you. Today is a Friday. I'm sure you would want to take it light, maybe relax a bit or whatever the case might be. But I want to say thank you, thank you, thank you for joining us. That's indeed been an awesome one. And you have any questions later, feel free to reach out to us, reach out to Mr. Victor Ufot, or you can reach out to your account manager, maybe the lady who gives you a call for information, whatever the case might be. I don't know whether you're in Lagos. If you're in Lagos as well, you could also visit the Lagos office. It's at number 45 Okwebi. Okay, you're in Abuja. Don't worry, we'll be coming over to Abuja soon for a seminar, right? So just put your ears to the ground. So when that would be, you can join us for that seminar and get acquainted. You can put a face to the voice or a face to the names or whatever the case might be. Not to me, but for the rest of the team, because I am not around at the moment, right? So when they come around to Abuja, you can meet them up and then just continue the relationship, right? The relationship between yourself and 10 Trade from there as well, right? So when that happens, you can invite people to join, tell them, wow, that has been really simple, you've enjoyed it and all. And then, of course, we will do more for you. So thank you, Enne Williams. I believe it's a Mr. Enne Williams. Thank you, thank you, thank you. I'm going to be stopping the recording now. And then, of course, we'll see you at another time.